Hey, hi guys, this is Arpita Tulsyan here. I hope you all are doing good. So, I am here with the amendment video for the upcoming May 23 examinations for CA Final Law Paper 4. Yes, so our institute has already come up with the amendment sheet which covers the relevant amendments for the May 23 examinations, as you can see here on the board. And they have covered in that particular sheet, they have covered amendments from 1st May 2021 till 31st October 2022. Past attempts amendments have also been covered in this particular sheet. So the students who already have my book, who already have the 10th edition book, which is applicable for the May 23 examinations, for those students, this particular video is there. If I talk about both the laws, Companies Act and other laws, okay, all the amendments of Companies Act, which is given in the ICI sheet, is already covered in our 10th edition book. So you need not worry about it as it is. Your Companies Act is covered in volume 1 of your 10th edition. So you can continue following it. No amendment, no plus minus thing to be done in that. Okay, as it is. Now, when I talk about other laws, in FEMA, a major thing has come, that is the overseas investment rules and regulations have been notified, which I am going to cover in this particular video, which can be seen by everyone, right? Achha, apart from that, one small point in FCRA chapter that I have covered in this particular, I'm going to cover in this particular video, that you have to do. In addition, a very small 2-minute thing which I'm going to tell you, and some 3-4 small points, no big thing, 3 to 4 some small points in IBC chapter, okay, that is additional, which you have to do along with your 10th edition book, which again I'm going to cover in this particular video. So this is all about the amendments. No need to fear, okay, everything has been covered. So just the 10th edition book plus this amendment video will be more than sufficient for you. Yes, and students who are using the old book, if say for example, if you are using the 9th edition book, then in that case, yes, you have to refer the entire ICI sheet which they have released now. In that, FEMA is the major big change. So for that, I am anyway going to provide a video on YouTube. You can refer that. For other chapters, you have to refer it from the ICAI sheet. Yes. So I hope we are all good to go, and we can start with the amendments. And yes, this sheet plus the class notes, if we are going to make any, this is going to be available on our website arpitatulsyan.com in the free note section. Free resources, there is free note section. There you can go and download these amendment notes plus the class notes. Everything is available there. Yes. So I think we can start with the amendments. Okay, so now let's start with the new rules and regulations which have been inserted in your FEMA chapter, that is your Foreign Exchange Management Overseas Investment Rules 2022, which was inserted from August 2022. And similarly, we have got your Foreign Exchange Management Regulations which were introduced together. Even those are Foreign Exchange Management Overseas Investment Regulations 2022. Yes. So now we are going to cover here specifically from exam point of view. What the ICAI has done here is the bare regulations and the bare rules which have been put up by the government has been as it is introduced in our syllabus. So we'll try to simplify it to the extent possible, and we will try to remember things which is relevant from exam point of view. Yes, okay. The notes that we are using is the same which has been given by the ICAI, right? Okay. So now we'll also divide the entire thing into small parts, so that whenever you go and revise, it becomes simple for you to recollect things. Okay, and if we go and learn this at a full stretch, then it will become very theoretical, like and you will feel like this is too much. So let's divide it in small parts and then we will study. Yes, so let's start with the rules first. Rules 2022. Everyone here on the board with me. So as you can see here, this was inserted with effect from 22nd August 2022 through the Ministry of Finance, and two regulations. Okay, one is transfer or issue of any foreign security, FEMA. These regulations 2004, and foreign exchange management, acquisition and transfer of immovable property outside India regulations. These things have been superseded, and the central government has made these new rules. Okay, so in place of these two, we have got these new rules coming up. These rules are called as what? These are called as Foreign Exchange Management Overseas Investment Rules 2022. Now after that, we have got a few definitions which is coming. Wherever, okay, first thing, wherever in this particular rules the word act is referred, means they are referring to the FEMA, right? FEMA 99, they are referring to that particular act. Then going ahead, yes, here it is. Can you see here, everyone? Yes, everyone here on the board. Huh? Yes. Okay. The next definition that we are getting, many terms which are used here in the rules are the terms which we have already studied before somewhere in the FEMA. So we will not stretch much upon those particular terms, but yes, we'll go through everything. Okay. Now, the next thing which is coming here is the definition of the term called as authorized dealer, AD category 1 banks, or in this particular rules, they are going to use it specifically as the AD bank. AD bank is nothing but, we have already studied this in section number 10 of the FEMA. While studying the chapter, we have already studied this, right? And so here, the authorized dealer banks which were registered under section number 10, about whom we have already studied in section number 10, those are coming here, and this shall specifically include only the domestic branches of such authorized dealer banks. Okay, so this includes your money changers and all those people, but only the domestic branches of the AD banks. Okay, then after that, the term control, okay, this is going to be used in an important definition. So your control in these particular rule means where we have got a right, okay, where we have got a right to appoint either majority of the directors. Okay, in some particular entity, we can appoint majority of the directors. That is the control that we are having. Or to control the management or to make the policy decisions. If I am able to control the management or if I am able to make policy decisions, that means I am having control there. Okay, it can be directly or indirectly. Or see, this is one, right to appoint majority of directors of the company, or to control management or policy decisions which are taken by an individual person or along with other persons directly or indirectly, including by virtue of their shareholding or management rights or voting rights, etc., that entitle them to 10% or more of the voting rights in any other manner in the entity. So what are they trying to say? Suppose if I am able to appoint majority of the directors, suppose if I am able to control the management, or if I am able to control the policy decisions, or if I am having stake in that voting rights in that particular entity of more than or equal to 10%, then that means that I have a control in such other entity. Okay, this is the meaning of the term control. So as you can see, I have divided into 3 points. First one was appointing majority of the directors. Okay, appointing majority of the directors, controlling the management or the policy decisions, or the voting power of more than or equal to 10%. Very clear with this? Yes, or voting rights we can say. Okay, then next one is disinvestment. Disinvestment, as you already know, disinvestment is nothing but you are extinguishing your right, or you are selling off your right, or your equity capital. Okay, selling off, just like we say when we do investment, when we purchase, when we acquire, that is called as investment. Whenever we are selling, that is called as disinvestment. Equity capital means the normal definition, normal equity which is there. Acha, next definition which is coming up here is financial commitment. Okay, now there will be a few important terms which will be coming here. Everyone, I'll just show it to you here. Okay, four terms which will be linked to each other. Okay, now see, one is your something called as financial commitment. Okay, one is something called as financial commitment. Then we have got something called as overseas direct investment, ODI. Then we have overseas portfolio investment, OPI. And then we have got something called as overseas investment. Okay, then there is something called as overseas investment. Okay, now for your simplicity, we will do these four terms together so that it becomes very easy for you to understand. Okay, now they say that, yes, everyone with me. Overseas investment is nothing but financial commitment, this thing. Financial commitment plus overseas portfolio investment. Overseas investment. Okay, this is everything taken together. Overseas investment. Any investment done by a person resident in India. Any investment done by a PRI. That is called as overseas investment, which includes financial commitment plus the OPI. Very clear. Did you understand till here? Okay, this is nothing but the definition of the term called as overseas investment. Okay, now ma'am, now please tell us what is this financial commitment then? So now let me simplify this for you and let me tell you, financial commitment is obviously a commitment, is an investment which is done by whom? Which is done by a PRI. Okay, it is done by a PRI outside India by way of overseas direct investment, ODI, okay, including plus debt, okay, any debt. This was your direct investment which can be in form of equity, plus there can be debt, plus there can be some non-fund based facilities. Non-fund based facilities means, any example if I have to give you is, where money is not involved as of now. Example, a promise which is given. Okay, just like a bank gives a guarantee. Similar kind of a thing. Okay, so a guarantee kind of a thing has been given by this particular entity, that if someone is not paying, then I will pay. That kind of a thing. So, non-fund based facility. ODI plus debt plus non-fund based facility, but, important point, but not OPI. Okay, but not OPI. Ma'am, what do you mean by this? Means OPI will not be included in the calculation or in the totals of financial commitment. Okay, OPI will not be included there. Are you clear with this, everyone? Yes? Okay, so see the words that they have used here. Financial commitment means the aggregate amount of investment made by a PRI by way of ODI, that was the first thing, debt, but other than overseas portfolio investment. Overseas portfolio investment, just remember, it does not form part of the financial commitment, or overseas portfolio investment in a foreign entity or entity in which ODI is made, and shall include the non-fund based facilities extended by such person to the foreign entities or on behalf of the foreign entities. So what all things are included in the term called as financial commitment? ODI is included, debt is included, but other than OPI and non-fund based facilities. So can I say this becomes very, very clear? Can I say this becomes very, very clear? Overseas investments minus OPI is equal to financial commitment. The same thing is happening. OPI is not getting included. OPI is not getting included in the term called as financial commitment. I hope I am clear till here. Yes. Okay. Now the two important terms. One is the ODI and the other one is OPI. Let's do this also so that we will be free and we can go ahead to the simpler definitions. Okay. Important definitions will be done till here. Okay. So now going on to the term called as ODI. Okay, what does ODI? First of all, full form is overseas direct investment. Okay, now just try to understand here. Three things will be included. Okay, three things will be included. First of all, if you have contributed to the equity of unlisted equity, if we say, of a foreign entity, but obvious of a foreign entity. Okay, equity capital of unlisted entity means there is an unlisted foreign entity and we have done investment. Those are unlisted, we have done investment in that. Okay, that will be included. Or if we have subscribed, we are a subscriber to the MOA, Memorandum of Association of a foreign entity. We have subscribed to the MOA of the foreign entity. That will also be included in the term called as ODI. Okay. Or say for example, investment of more than or equal to 10% of the paid up share capital of a listed foreign entity. Okay, investment of more than or equal to 10% of paid up share capital of listed foreign entity. Or say for example, investment with control. Remember the term called as control where we had divided into 3 points there? Yes. What were the things which are coming under the term control? Right to appoint majority of directors, to control management or policy decisions, or 10% or more voting rights. Okay, voting rights. So where we have done investment with control and we are getting, control is there, we are controlling that particular foreign entity and investment is less than 10%. Control is there, but investment is less than 10% of that particular paid up equity capital of the listed foreign entity. Did you get this, everyone? Yes. All these things will be included in the term called as ODI. Means first of all, equity capital of unlisted entity. We are a subscriber to MOA of any particular foreign entity. If we are holding more than or equal to 10% of the paid up share capital of the listed foreign entity, or if you are holding less than 10% but I am having control, then all these things will be included in the term called as overseas direct investment. And does overseas direct investment form part of financial commitment? Answer is yes, it forms part of financial commitment. Very clear with this? Achha, one important thing that they have told us in the definition. Say for example, sometime what happened was, suppose if I have invested more than or equal to 10% into the paid up share capital of a listed foreign entity, means I have done overseas direct investment. Okay, now let's say after some time I have diluted my stake and it has gone to less than 10%. Once it was more than or equal to 10%, say for example it was 15%, then I sold, say for example 6% of my capital, so it went down to 9%. Then too, that investment will still be counted under ODI. Means even if my stake later on goes below 10%, then also it will be counted in the term called as overseas direct investment. And same applies for the term control. Once I had control, okay, and I was falling under this fourth point. Once I have control, later on I lost control. Okay, then too I will be still included. That investment which I have done in that foreign entity or that investment done by the person resident in India will still be included in the term called as overseas direct investment. Very, very clear with this? Yes, so these four things are included in the term called as overseas direct investment. So this was the first standalone definition that we have studied. Okay, what was the meaning of the term overseas investment? Overseas investment was everything. Okay, overseas investment was each and everything. Financial commitment just excluded the OPI. Okay, so now let's try to understand what do you mean by this term called as OPI. Let's try to understand that. Everyone with me? Yes? Okay. So now going on to, this ODI definition is given here. In your book itself it's given. Yes, here it is. Overseas direct investment. This definition is given here in your notes. Okay, and the explanation which I just gave you, that even if later on my stake falls to less than 10% or if my control goes down, then too my investment will be included in the term called as ODI, that is given here. Very clear with this? Okay, overseas investment we have already completed. Okay, now let's go to the next definition, that is your overseas portfolio investment. Okay, now, here, everyone. Ma'am, what do you mean by the term overseas portfolio investment? Okay, so overseas portfolio investment means obviously other than ODI. Other than ODI. ODI basically means we are doing investment directly in someone's equity. That was your ODI. Now this is something else. Okay, now this is something else. We are doing some sort of investment, obviously in foreign securities. Goes without saying, obviously in foreign securities, but first of all excluding ODI, because ODI will be considered separately. But not in any unlisted debt instruments. Unlisted debt instruments will not be included in the term called as OPI. Okay, if we are investing in any unlisted debt instruments, that will not be included in the term called as OPI. Okay, but ma'am, then where will it go? Where will it go? Debt instrument. It will not go in ODI. In OPI, it is not coming. But ma'am, will it come in financial commitment? Yes, it will come in the term called as financial commitment, because financial commitment included all sorts of debt. Yeah, are you clear with this? Yes? Okay. So other than your unlisted debt instruments, that is one particular thing which is excluded from the term called as OPI. Or if say for example, any security which is issued by a PRI who is not in an IFSC. Any security which is issued by a PRI himself, who is not in IFSC, who is not in IFSC. IFSC stands for International Financial Service Center, that you already know. You have studied that in direct taxes also. So if that is not in IFSC, means it is not international, right? If it is not international, means that becomes kind of domestic. So domestic is anyway not included in overseas portfolio investment, right? Okay, so for simplicity, let's assume this as OPI is any investment done by a PRI in foreign securities, but other than two things. One is other than ODI, obviously, one is other than ODI, and next one is other than unlisted debt instruments. Okay, that is the meaning of which term? That is the meaning of the term called as OPI. Okay, now say for example, let me ask you a simple thing here, everyone here with me. Okay, suppose if, I'm just asking you question, you try to answer me. Suppose if, you can see on the board, you can use a reference on the board. Suppose if I have 15% stake in Apple, listed foreign entity. I have 15% stake in Apple. Will it be called as ODI? Yes, ma'am. Answer is yes, because of the third point. Now, say for example, I have 5% stake in Apple. with no control in Apple. Possible? Ma'am, very much possible. We have, say for example, we have 5% stake in Apple, but I don't have any control in Apple. Will I fall in the fourth point? Achha, I am not a subscriber to the MOA. I have taken the shares from open market, so I am not a subscriber to MOA. So I don't fall under the second point also. Since it is a listed entity, I don't fall in the first point also. Achha, do I fall in the fourth point? 5% in the listed entity. Okay, second part is met, but I don't have even the control also. Means, can I say I am not even coming in the fourth point also? Means I am not falling, even if I have directly invested in the equity of listed foreign entity, that is Apple, but still I am not able to fall under the ODI definition. If I am not able to fall under the ODI definition, then I will come in the definition of the term called as OPI, because it said investment in foreign securities, which can include equity as well. Okay, example, 5% paid up share capital in Apple with no control. Means I am not falling under ODI, so I will fall under OPI. This is, I am not telling this, this is told by the definition. This is a proviso which have been put here in the definition. Are you clear with this, everyone? Yes. Okay. So let's recollect, everyone here. First of all, overseas investments is what? Overseas investment is everything, that is financial commitment plus the OPI. Okay, financial commitment plus the OPI. Ma'am, what do you mean by financial commitment? So financial commitment was ODI plus debt, but other than OPI, and plus non-fund based facilities given by such particular PR. Okay, ma'am, explain now what is ODI. So ODI has four things: equity capital of any unlisted entity, subscriber to MOA of any foreign entity, stake of more than or equal to 10% of the paid up share capital of any listed foreign entity, or investment with control but having less than 10% of the stake. Then these four people will come under the term called as ODI. Okay, debt, we already know, any kind of investment done in form of debt, that will come here. Okay, plus non-fund based facility, that was already discussed by us, any kind of a promise done. This is included in the term called as financial commitment. Financial commitment plus OPI. Now what was OPI? OPI means investment done by PRI in any foreign securities, but other than ODI and other than unlisted debt instruments. Whatever is not included here will anyway fall under financial commitment. Okay, that will be included where? That will be included in the financial commitment. Very clear with this? Yes. Okay, so this was the definition of the term called as overseas portfolio investment. So four things done: financial commitment, then ODI, OPI, and overseas investment. Very clear with this? Okay, now a few more small definitions. Let's try to do that. Next one which is coming up here is financial service regulator. Okay, financial service regulator is nothing but an authority which regulates the entities which are engaged into financial services. Insurance, IRDA is there. Pension fund regulatory and development authority is there. Then for your banks, Reserve Bank is there. For stock exchange, your SEBI is there. So these becomes your financial service regulator. Right? Then the next thing that we have is foreign entity. Ma'am, what do you mean by foreign entity? Obviously, any entity which is formed and which is registered outside India, or we can say which is incorporated outside India, having limited liability. Important, huh? Achha, even IFSC will be included there only. I told you in the beginning itself, IFSC means something international. International here means foreign, but having limited liability. But one proviso which came here is limited liability is not applicable It is not applicable to the entities which are engaged in strategic sector. We will see what is the strategic sector. Which all entities are included in the term called as strategic sector? Energy, natural gas, etc., oil, gas, coal, mineral ores, etc. Those are included. Entities which are engaged into this are considered as entity engaged into strategic sector. We have the definition coming. I'll give you the reference also. Okay, but before that, what do you mean by the term foreign entity? Foreign entity is any entity which is formed, incorporated outside India, including IFSC. IFSC foreign, international. So it will be included in the term called as foreign entity having limited liability. Okay, but unlimited liability will be allowed if the entity is engaged in strategic sector. Okay, ma'am, what do you mean by, what did you say about strategic sector? So yes, we have that definition as well. Strategic sector is given here. It includes energy and natural resources sector. Example, oil, gas, coal, mineral ores, submarine, etc. Those will be included there, or any other classification which is done by the central government later on. Those will be included in the term called as strategic sector. Very, very clear with this? Yes. Okay, so foreign entity definition is done and strategic sector is done. Now, another thing, another definition which is coming up here is host country or host jurisdiction. Okay, it is that particular country or place, we can say, or any state where the foreign entity is formed, registered or incorporated. Okay, see here it's given country or jurisdiction including IFSC, because whenever we use the word International Financial Service Center, it means outside India. Okay, it is treated at par with foreign entity. So means the country or jurisdiction including the IFSC in which the foreign entity is formed, registered or incorporated. Example, Flipkart. Flipkart was incorporated. Flipkart was incorporated in Singapore. So that becomes the host country or the host jurisdiction. Okay, Flipkart is headquartered in Bangalore. Okay, but it was incorporated outside India. It was incorporated in Singapore. So for that matter, it becomes the host country. Yes. Okay. See, till now the definitions that we have done: control definition, overseas investment, financial commitment, ODI, OPI. 5 things to be remembered specifically. Rest all to be understood. Did you get this? Okay, 5 definitions to be remembered, but rest definitions to be understood. Example, for host country, to be understood, not to be by hearted. Okay. Then going ahead to the next definition, that is your Indian entity. We just did a definition called as foreign entity, right? Now let's do Indian entity. Can you define Indian entity? Indian entity will include a company, Indian company incorporated here in India, or we can say the any company as per the Companies Act 2013. Then it will include body corporate incorporated by any particular law here in India. Then your LLP will be included. LLP incorporated under the LLP Act 2008, and even the partnership firms, but which are registered. Registration of partnership firms is not mandatory, but only if you are registered under IPA 1932, then only you will be included in the term called as Indian entity. So 4 people included in the term called as Indian entity: company under Companies Act, body corporate, LLP and partnership firm registered. Okay. Then IFSC, I need not define. International Financial Service Center, they have the same meaning as given under the IFSC Authority Act. Then next one is last audited balance sheet. What do they mean by the term last audited balance sheet? Last audited balance sheet is here for the purpose of these rules. It means whenever a particular transaction is taking place, before that particular transaction, like preceding that transaction, during the last 18 months, during the last 18 months, whenever, whichever was your latest audited balance sheet, that particular date balance sheet will be called as last audited balance sheet. Okay, example, if the transaction is taking place in June 2023, for example, if the transaction is taking place in June 2023, and if we have the latest balance sheet available, latest audited, for example, if we have it as on 31st March 2023, then the balance sheet as on 31st March 2023 will be termed as the last audited balance sheet. Okay, so see what are they telling? Last audited balance sheet means audited balance sheet as on the date not exceeding 18 months. Not exceeding 18 months means maximum during the last 18 months, whichever was the latest audited balance sheet available with you. Okay. Then the next one. Next two are self-explanatory, very simple. Listed foreign entity. We have already done the meaning of the term called as foreign entity. So we can say that any foreign entity which is listed on any recognized stock exchange outside India will be included in the term called as listed foreign entity. And similarly for listed Indian company, any Indian company whose securities are listed, okay, equity shares or compulsorily convertible instruments, compulsorily convertible into equity, those are listed in the recognized stock exchange here in India. For listed foreign entity listed in any recognized stock exchange outside India. Listed Indian company listed in a recognized stock exchange here in India. Very clear with this? Yes. Okay. Then after that, mutual fund means any fund which is registered with SEBI. Net worth definition is to be taken from the Companies Act. Section 2 clause 57, same definition as that of your Companies Act. Okay. Now listen, in Companies Act, they have given us the definition for net worth of a company. What about net worth of a registered partnership firm, or what about the net worth of a LLP? So they say that, I'll just simplify it for you, everyone here. Net worth of company. Net worth of company we have to take as per the Companies Act 2013. Okay, then we talk about net worth of registered partnership firms or LLP. This we have to study new. So they say here is the total capital contribution of partners, both na capital will be contributed in both LLP as well as the partnership firm. Capital contribution of partners taken together plus the total undistributed profit which will be ultimately going to the partners, which is the net worth of the firm. Undistributed profits of the firm minus, if at all there are any accumulated losses and deferred expenditure and miscellaneous expenditure. This you must be knowing already. This we do in case of companies also. Miscellaneous expenditure to the extent not written. So basically capital contributed plus the undistributed profits minus the accumulated losses. This is the net worth, and these two obviously, if applicable, this is how we calculate the net worth of a registered partnership firm or net worth of a LLP. Simple, clear till here? Yes. Okay. So here it is. Net worth is done. Net worth definition is done. ODI we have already completed. Overseas investment we have already completed. OPI we have already completed. Now smaller definitions coming up here. Now, first of all, definition of relative, they say go and take it from the Companies Act. So section 2 clause 77 was the place where we studied the definition of the term relative. Resident individual. Okay, focus on the word individual. Individual means they're trying to talk about a natural person. Okay, it means a PRI, but who is a natural person? Person like me. And PRI definition we have studied throughout FEMA. Yes. Then RFC account. RFC account we have already studied in the FEMA chapter. It is already defined in the regulations. Then SEBI is nothing but the board which is established under the SEBI Act. Society is nothing but a society registered under the Societies Registration Act. Acha, subsidiary is nothing but such an entity in which the holding company or in which the foreign entity has control. That becomes the subsidiary. Strategic sector definition, we have already done, energy and natural resources sector. Then sweat equity shares, you already know. Those are nothing but the, just like ESOPs, those are the shares which are issued, equity shares which are issued by the foreign entity to its employees or to its higher level employees like directors, etc., for a consideration either at a discounted, obviously at a discounted price, for consideration other than cash, or whenever there is any such negotiation between them. For example, in place of or in lieu of extra remuneration, they are going to get the ESOPs, or after fulfilling a vesting period, after fulfilling some number of years, you will be eligible for those ESOPs. That is nothing but the sweat equity shares. Nothing new, we have already studied this. And then the trust is nothing but a trust which is registered under the Indian Trust Act 1882. And the last definition given up here is venture capital fund, nothing but a registered fund with SEBI. Yes. So here it's given, venture capital fund is nothing but a fund which is registered with the SEBI, which is engaged into specific activities. Yes, so the one-liner definitions which are there, those are nothing but the terms which we have heard before, which we have been using regularly. But those 5 definitions which we had studied, financial control, financial commitment, overseas investment, ODI, OPI, 5 terms are super duper important. Yes, so till here our definition parts get completed. All these definitions we were doing under the rules. We are studying the foreign exchange overseas investment rules 2022. Now these rules, what we are talking about, these rules are formed by the central government. Okay, these rules are formed by whom? These are formed by the central government, but these are administered by the RBI. RBI regulates it, RBI administers it. Okay, and whenever we want any clarifications in that, whenever we want any explanations in that, whenever we want any circulars, then those are released by the RBI on the website of RBI. Okay, those are released by the RBI. Very, very clear till here? Yes, so till here is your first part. Okay, till here is your first part of the rules. Are you clear till here, everyone? Yes, including the definitions. Okay. Okay, so now let's start with the next part. We have covered till the definitions mainly, right? Now the next point, as you can see here, non-applicability of rules and regulations. The rules that we are studying, foreign exchange, overseas investment rules and regulations, in certain cases, those are not applicable to 4 people. Okay, let's try to understand what is that. Now, nothing shall apply to means it is not applicable to any investment made outside India by a financial institution in an IFSC. If means investment is done by whom? Investment is done by a financial institution in IFSC. Then they say that these specific rules are not applicable, something else will be applicable to them. Okay, if the investment is done by whom? By a financial institution. Achha, that is the A point. Another thing, B point, acquisition or transfer, purchase or sale kind of a thing of any investment outside India made out of RFC account. If the investments have been done out of RFC account, these rules not applicable. Or if the money has been paid out of foreign currency resources which is held outside India, because there is no money flow from India. Okay, out of foreign currency resources held outside India by a person who is employed in India, means that particular person is employed in India but for a specific duration, for any job, for any specific job or assignment, and the duration does not exceed 3 years. Means he is such a person who is working here in India temporarily for maximum 3 years, but all his foreign resources are there, means outside India, and he is making payment from there. So they are telling that this is not at all an overseas investment. So these rules will not be applicable because there is no outflow here from India. Okay. Or in accordance with section 6(4) of the act. Section 6(4) of the act also we have studied, which talks about acquisition of securities or immovable property by a PRI. Okay, acquisition by PRI when he was a PROI. Means he had purchased some investments, or he had done some investments outside India when he was a PROI. So we are not at all concerned with that. And now that particular person has become what? Now that particular person has become a PRI. So these rules won't apply. Okay. So four cases where these rules and regulations are not applicable. Okay. Let's talk about the non-applicability. Let's talk about non-applicability. What is that? Okay, first one, if there is any investment done by financial institution in IFSC, then these rules and regulations are not applicable. Okay, next one, if there is some acquisition or transfer of any investment, outside India, where the payment is done out of RFC account, or where the payment is done out of foreign resources. I am just temporarily employed in India, but all the payments etc. have been done from outside India, from those foreign accumulated resources. Or when the acquisition was done when I was a PROI, now I am a PRI, but that acquisition was done when I was a PROI. So to those circumstances, or to those cases, these FEMA rules and regulations are not applicable. Yes. Okay. So this was talking about what? This was talking about the non-applicability. Yes, this non-applicability can be important. Okay, this can be important. Now, next one, this fifth point, this is full one-time read. This just classifies. Central government has basically classified which instruments will be considered as debt instruments and which instruments will be considered as non-debt instruments. Okay, example of debt instruments can be bonds, government bonds, corporate bonds, or borrowings. Those will come under the term called as debt instruments, and non-debt will be anything other than that. That is your what do you say, your equity will come under non-debt instruments, investments, then any capital contribution in LLP will come under non-debt, and all those things. Okay, so please don't by heart this. Okay, please don't by heart this. This is just for your understanding. Fifth point, you can mark it as a one-time read kind of a point. Yes. Okay, then going ahead to the sixth point, kind of a grandfathering clause. This is kind of a grandfathering clause. Continuity of certain investments. Continuity of certain investments. What do you mean by this? Now, if there is any particular investment, or if there is any financial commitment which we have done, which we had already done outside India, before these new rules came into picture, means before 22nd August 2022, then those will be deemed to have been made as per the new rules and regulations. Means the old investments also, now the new rules and regulations will be applicable. Okay, just like the same grandfathering clause which was applicable in case of LTCG when LTCG became taxable, right? Same way, all the old investments which were done, old overseas direct investment or portfolio investment, by whatever name called, if there was any such investment done, to those, now the new rules and regulations will be applicable. Very clear with this? Yes. Then going ahead to the next one, that is rights issue and bonus shares. rights issue and bonus shares. Now, if we are doing any equity capital investment outside India, suppose if we are holding any capital in any foreign entity as per the rules, normally, legally, properly as per the rules, if we are holding, can we get some rights? Can we subscribe to rights? Answer is yes. Can we be granted bonus shares? Answer is yes. Can we renounce our rights? Answer is yes. So if we are holding the basic equity capital, then the rights on it, bonus on it can be done. That is told in the 7th point. Okay, whatever I am telling you, see, I am just trying to summarize each point for you, because to absorb this much of content, it becomes very, very difficult. So I have tried to simplify things for you. What you can do is, besides this, if you have taken the printout of this, then just besides this, you can write in short that what does this entire paragraph mean. Yes. Okay. Then going ahead to the next one, prohibition on investment outside India. This is a very general point which we have studied many times in FEMA also. They say that if any person wants to do any investment or any financial commitment outside India, you have to do it as per these rules, otherwise it is prohibited. See the heading now. What is the heading that is given here? Prohibition on investment outside India. Means if you want to do any investment, okay, if you want to do any investment outside India, it has to be done in accordance with these rules and regulations only. Otherwise it is altogether prohibited. Very, very clear with this? Yes. Okay. Then the next one, this is important, star mark. Overseas investment, 9th point and 10th point. In fact, both are important. 9th and 10th point, both are important. Can we go ahead, everyone? Yes. So overseas investment, what is this talking about? Overseas investment. So they say that if any person, if any PRI, to be very specific, if any PRI wants to do any investment in a foreign entity, that is nothing but overseas investment. If we want to do such a thing, then that foreign entity in which we are doing the investment, that should be engaged in bona fide business activity, genuine business activity. Okay. So in such a kind of foreign entity only we can do the investment. Ma'am, this we already know. I know that you know, but this is what the rules have to say. So see, what are they telling us here? Any investment, any investment made outside India by a PRI shall be made in a foreign entity engaged in a bona fide business activity, genuine business activity. Okay, that can be either directly or through its subsidiary or through any third company, that is your special purpose vehicle. And that investment can be done only in accordance with the foreign exchange overseas investment rules and regulations. So only one point that we have got from here is the foreign entity where we are doing the investment. That entity should be engaged in bona fide business activity. Okay, this one I am highlighting here. This one is the first point that we have got. Okay, then secondly, now the provisos which are coming up here. The first proviso here says that the structure of such subsidiary or step down subsidiary of the foreign entity shall comply with the structural requirements of a foreign entity. Not so very important. They are stating that, or they are telling us here is, if the foreign entity, if we are doing investment in the foreign entity or its subsidiary, then the subsidiary should also comply with the requirements of the foreign entity. Acha, next one is important. This proviso is important. Provided further that, again a proviso, overseas investment means putting the money, or transfer of investment means realizing our money, including swap of securities. Swap of securities is nothing but a derivative contract. Including swap of securities in a foreign entity formed, registered or incorporated in Pakistan or any such kind of country shall require prior approval of central government. This is the second point which is to be remembered. Means they are telling that if we want to do investment in Pakistan or if we want to remove our money from Pakistan, to do such transaction, we require prior approval of central government. Only if government says, then only we can deal with such type of countries. I shall not say more. Right? Okay. And ma'am, what do you mean by bona fide business activity, which you are told in the first point? That is nothing but which is permissible by the law. Okay, which is permissible by our country's law also and by the host country's law also. It should be permissible. Then only that becomes a bona fide business activity. Right? Okay. Then, so 2 points that we studied till now. In overseas investment, first point, investment should be done in a foreign entity which is engaged in bona fide activity. And second one, for doing transaction in Pakistan, take prior approval of the central government. Then the next one. Now they say that notwithstanding anything contained, in spite of anything contained in the rules or regulations, they say that central government may, on application made to it through RBI, permit financial commitment in strategic sectors or geographies above the limit laid down. Now, later on we will study what is the limit, how much is the maximum investment that we can do. But if we go and make a request to the central government via the RBI, then they can allow us to do more than the limit, but provided the investment is in strategic sector. Okay, this is one point. And the Reserve Bank may, on application made to it through the authorized dealer bank, permit a PRI to make or transfer any investment or financial commitment. So if RBI is satisfied, then it will allow us to do the investment even beyond the limits. Okay, even beyond the limits. And provided that overseas investment made by a PRI shall not be made in a foreign entity, it should not be done in so and so country where the central government prohibits. If central government, for example, if central government says you cannot do investment in China, for example, okay, then we cannot do any overseas investment there. Yes, so limit can be increased. What we have studied till here is here. Central government can increase the limit which is laid down in these rules and regulations. It can increase the limit, but provided we have made an application and provided the investment is going to be done in the strategic sector only. Okay, then the last one, important. We'll conclude it, okay? The Reserve Bank, if it considers necessary, may, in consultation with the central government, stipulate, decide the limit for aggregate outflow during a financial year on account of financial commitment or OPI. RBI will decide the limit along with central government. What is the maximum amount that can be done? And stipulate the ceiling beyond which the prior approval will be required. So RBI will basically set a limit that in a financial year, how much overseas investment we can do without obtaining any approval. And plus, if you want to do more than this, okay, if you want to do more than this, then take the prior approval. That limit will be set by whom? That limit will be set by the RBI after consultation with the central government. Done. Simple, everyone. Yes. So this was all about your overseas investment. Okay. 2 points that we remembered in the first sub rule was, first one was the foreign entity where we are doing the investment, that should be engaged in a bona fide business activity only. Okay, next one, for Pakistan, prior approval of central government is mandatory. Okay, next they say that if we want to do if we want to go above the limit, central government can allow us to go above the limit for strategic sector. Acha, for normally they have told that central government and RBI will set the limit for a particular financial year, that how much amount of overseas investment can be done, and if it goes beyond that, then approval will be required. Very clear with this? Simple? Okay. Then going to the next one. Okay, 10th one also I told you this is important. Everyone with me? Can we start? So now here they are talking about, this was a new thing altogether which was introduced. Please mark it as important. Have you already marked this as important? Yes. No objection certificate, everyone. Now, what they are telling here is, any PRI. See, obviously, if we are talking about overseas investment, then that is done by a person resident in India only. Any PRI who has an account called as NPA, classified as NPA, or which is classified as willful defaulter by the bank. My loan account, etc., has been classified as NPA, non-performing asset, or that person has been classified as a willful defaulter by the bank, or that person is under investigation by any financial service regulator or by any investigative agencies in India like ED, CBI, etc. Means, can we just say that these people are the defaulters? Right? Can we just say that these people are defaulters? So before these people do any overseas investment, what will we say to these people? If you have so much money to do overseas investment, why don't you get your name out of this defaulter list? Right? So before these people make any financial commitment or they do any disinvestment also, please obtain a no objection certificate, NOC, from the lender bank wherever your account is classified as NPA, or that regulatory body or the investigating agency, ED, CBI, etc., by making an application to them. So before you do any new investment or before you do the disinvestment, before that, make sure that you have to compulsorily obtain a NOC. That these people, the people with whom you have done the default, these people don't have any objection in you doing or you dealing with any overseas investment. Right? Achha, but what if we don't get a NOC? We should get a NOC within a time period of 60 days. Whenever they received our application, from that day, within 60 days, they should give us the NOC. If we don't get the NOC, silence is treated as acceptance. Means here it will be presumed that there was no objection to the transaction. Means it will come in the favor of that PRI. Okay, it will come in the favor of that PRI that okay, fine, no problem. Yes. Then the next one, the NOC issued shall be addressed. If suppose they are issuing the NOC within a time period of 60 days, it should be addressed to the designated AD bank with an endorsement to the applicant also. So basically it should be addressed to the designated AD bank, and one copy should be even given to the applicant. That these lenders or these investigating agencies don't have any problem in we doing the overseas investments. Yes. So this is very, very important. 10th point was very, very important. Right? Now let's go to the next 5 points. Point number 11 to point number 15. Next 5 points. Okay. Now in these 5 points, what they have told here is, can you see the reference? Everyone here on the board. Can you see here? Schedule 1 is written, Schedule 2 is written, Schedule 3 is written, Schedule 4 is written, and Schedule 5 is written. Can you see this? Everyone? Yes. So they are telling that if there is any ODI which is to be made by an Indian entity, its terms and conditions will be given in Schedule 1. Similarly, if there is any overseas portfolio investment to be made by an Indian entity, that will be given in Schedule 2. The terms and conditions for that will be given in Schedule 2. Similarly, overseas investment by resident individual, for that the terms and conditions will be given in Schedule 3, and so on. And we have these 5 schedules coming up. Okay, after these pointers get over, after the 21 points get over, after that you have the schedule starting. So that we'll study there. And schedules are the end of the rules. Okay, Schedule 1, 2, 3, 4, 5 are the end of the rules. Yes, so we are not studying these 5 points here because anyway we are going to study those things in detail. Then going ahead to the next pointers, everyone. Now the next point, that is your pricing guidelines. Okay, very simple point. What they have told here is, everyone with me, no need to read it fully. Now here they say that whenever there is any investment, whenever there is any investment to be done by a PRI, whenever there is any overseas investment which is to be done by a PRI, or whenever there is a disinvestment to be done, these transactions should always be done at arm's length price. First point to be remembered here. These transactions, that is nothing but the pricing guidelines, means it should not be affected by any factors. It should be done as if it is a normal open market transaction. Okay, and this arm's length price, this market price will be determined or will be decided by taking into consideration the valuation as per internationally accepted pricing methodology for valuation. Means whenever you are determining arm's length price, there are different methods for determining the arm's length price. This you must have studied in your direct access transfer pricing chapter also, right? So this year, for the purpose of FEMA rules, internationally accepted pricing methodology for valuation should be used. So pricing guidelines simply say this much. Pricing guidelines simply say this much, that whatever transactions are happening under these rules should be done as per arm's length price. Very clear with this? ठीक है, okay. Then the next one, that is transfer or liquidation. Okay, simple point, transfer or liquidation. Now, what are they trying to tell us here? First of all, if we are doing investment in overseas or in any particular foreign entity, will there be a disinvestment also? Or will there be a transfer also? Yes, suppose if we are investing, then there will be sale also. If there is a purchase, then there will be correspondingly sale also. So, what are they telling here is, whenever you are selling it, the sale also has to be done as per these rules and regulations only. If investment was done as per the rules, even the sale will be done as per the rules. Yes, that is the first one. Next one. A person resident in India, this point. Person resident in India can transfer that equity capital to another PRI also. Suppose if I have done investment, I have done some overseas investment, I can transfer it to another PRI also, provided that person is an eligible PRI. Okay, that person is an eligible PRI, or simply a PRI can even transfer it to a PROI. Yes, that is one particular point. And the next point here, which is coming up, in case the transfer is because of merger, amalgamation, demerger, buyback of the foreign securities, such transfer or liquidation of the foreign entity shall have the approval of the competent authority as per applicable laws in India or laws of the host country. Say for example, in case of merger, for example, we give the shares of the transferor company and the selling company, and we get the shares of the purchasing company. So same thing here, that amalgamation. So here we'll have to give, there will be a transfer of shares, right? So this will be, this is allowed. First of all, they say that this is allowed, and next thing, that amalgamation, merger, buyback, etc. should have the approval of the competent authority of either India or of the host country. So this second point was talking about normal transfer. Can I give it to another PRI here in India? Yes. Can I give it to a PROI? Yes. Can transfer happen because of merger, amalgamation, buyback, etc.? Answer is yes. Just that merger, amalgamation, buyback should have the approval of the competent authorities. Then the next one, where the disinvestment by a PRI pertains to ODI, the transferor in case of full disinvestment other than by way of liquidation shall not have any dues outstanding for receipt which such transferor is entitled to receive from the foreign entity. Means, suppose if a PRI is selling his ODI, full consideration should be received. Full consideration should be received, and we can sell only after 1 year. Okay, we can sell only after 1 year from the date of making the investment. Means there is a lock-in period of 1 year, and after that, if you decide to sell, then you should be receiving full consideration from that particular foreign entity. It's not that you take some amount now and you keep the balance amount pending, or you waive off the balance amount. No, the entire amount should be received now. Yes, and this proviso is important here. They say that the above conditions will not be applicable in case of merger, demerger or amalgamation between two or more foreign entities that are wholly owned by the Indian entity, or where there is no change or dilution in aggregate equity holding of the Indian company. Now say for example, there are two foreign entities which are getting merged, which is being controlled by a common Indian entity. And even after merger, the holding of Indian company is not changing. So here they say that lock-in period of 1 year, full consideration to be received, etc. Those points are not applicable, because there the shares transfer is happening for an exchange. We are giving the shares of the transferor company and we are getting the shares of the new company. Yes, and the last point. Holding, this is very general and simple point. Holding of any investment or transfer shall not be permitted if the initial investment was not permitted. Obviously, if the original thing was not done legally, then you cannot continue holding the investments now legally. Right? So, what all things did we study here, everyone? What all things did we study here in this 17th point? It was talking about transfer. First point was talking about transfer. Can a PRI transfer it to a eligible PRI? Answer is yes. Can a PRI transfer it to a PROI? Yes, right. It can transfer. Next, can the transfer happen because of merger, amalgamation, etc.? Yes, just that the merger, amalgamation, buyback, etc. should have the approval of the competent authority here in India, or as per the competent authority of the host country. Then after that, what if we are selling off, there is a normal disinvestment of ODI? Then two conditions. First one, there should be a lock-in of 1 year, and another thing, full consideration should be received. But this point is not applicable in case of exchange of shares, where Indian entity is having ultimate control of those two merged entities. Yes. Okay, so then let's continue ahead with the next point, that is restructuring. Okay, this is a very different point and an important point. So what are they telling us here is, say for example, if there is a PRI who has made overseas direct investment in a foreign entity. Okay, we have done in a foreign entity, and that foreign entity has been incurring losses for the last 2 years, as can be seen from the last audited balance sheet. Okay, it has been doing losses. Then, subject to all the compliances, etc., we can allow a PRI, an investor of that particular foreign entity, we can permit restructuring of balance sheet. Means that foreign entity's balance sheet can be restructured if we say so, if we allow and subject to diminution in total value of outstanding dues towards us on account of investment in equity and debt after such restructuring not exceeding the proportionate amount of accumulated losses. Means what? The foreign entity's balance sheet is already into losses. My investment is there in that particular foreign entity. Means can I say foreign entity owes me some amount? Means I am a liability for the foreign entity. Foreign entity can reduce my outstanding due. Okay, example, if the outstanding due was, say for example 100 rupees, that 100 can be reduced by the losses. Obviously 100 will be reduced by my proportionate loss. Example, if I have 5% stake in the company, then 5% of the total losses can be reduced from my dues and I will be getting something less from them because I am sharing their losses. But this can be done only if we permit. Okay, this can be done only if we permit. So see what are they telling? So basically total dues or total amount which the company owes to me, that amount can be reduced by the proportionate loss. Okay, provided that in case of such diminution where the amount of corresponding original investment, my investment, is more than 10 million USD, or in the case where the amount of such diminution exceeds 20% of the total value of outstanding dues. Means my proportionate losses is more than 20% of my outstanding dues. The diminution in value shall be duly certified as per arm's length price. So two cases. Okay, first of all they say that suppose if that foreign entity has been incurring losses for the last 2 years, then Indian investor, or we can say that particular PRI can permit that foreign entity to go for restructuring. Means whatever amount owed by whom? Amount owed by foreign entity to the PRI, that will be reduced by the proportionate losses of the foreign entity. Okay, and this is the net amount. This is the net amount which I will receive, which the net amount receivable by the PRI. But there are two circumstances where this diminution, this reduction has to be done as per arm's length price. Which are those two circumstances? In either of these two circumstances, suppose if the investment is more than 10 million USD, then they say that investment is a huge amount. So if at all any diminution is done, please do it as per arm's length price. Okay, or if the diminution exceeds 20% of my original outstanding amount, means this diminution, this is more than 20% of this, then it means diminution is more than 20% of the original investment amount. Means there is a big diminution. Na? If there is a big diminution, then whatever things you are doing, that should be done as at arm's length price. Are you clear with this? Yes, this is written here. Restructuring point is given here. Last 2 years losses. Last 2 years losses is given here. And then the proviso, the two circumstances which I just told you, that is given. Yes. And one more proviso is coming up here. Provided further that certificate dated, the certificate is for that arm's length price valuation. Certificate dated not more than 6 months before the date of transaction. Means it should be maximum 6 months old. The certificate should be maximum 6 months old, which we are submitting to the AD bank. that what are we stating to the AD bank? That diminution in value has been done, because now at the time of sale of those investments, I'm going to receive something less. So we have to inform the authorized dealer category 1 bank that see so and so diminution was done, and so and so diminution was done as per arm's length price. Okay, so this was all about, in the 18th point, whatever we studied here, everything was about restructuring, and yes, this point is important. Okay, this point becomes super duper important. Chalo, then let's go ahead, moving to the next point, everyone. 19th point, which talks about restrictions and prohibitions. Simple, nothing much is there here. Now they say that whenever a PRI is doing ODI in a foreign entity, okay, here any foreign entity, we had studied that for doing overseas investment, foreign entity should be engaged in bona fide business activity. Okay, but 3 business activity is not allowed. Okay, don't miss out the word no person, no PRI. Okay, if you just read this, shall make ODI, then the entire meaning changes. Okay, that foreign entity should not be engaged in these 3 activities. First one, real estate activity, then gambling in any form, and the last one is if that foreign entity is dealing with such financial products which is linked to Indian rupee, and if they are doing this without specific approval of the RBI. If example, rupee denominated bonds. Rupee denominated bonds are denominated in Indian currency. So if that foreign entity is dealing into RDB without the approval of RBI, then we cannot go and do ODI in such a foreign entity. Yes, so these 3 activities are altogether prohibited, but yes, there's a twist, exception in exception. Real estate activity means buying and selling of real estate or trading in TDRs. These 2 are prohibited, buying and selling of real estate and trading in TDRs, but does not include development of townships, construction of residential or commercial premises, roads, bridges for selling or leasing. Means if that foreign entity is engaged into development of township, development of residential and commercial premises, development of road, bridges, etc., then no problem, we can still do the investment. If it is engaged in buying and selling of real estate, we cannot do. If it is engaged into trading of TDRs, then we cannot do. Very clear with this? Yes. Okay. Then going to the next one. So this is important. This point is important. And for real estate, we need to study the note, which is explanation, which is given. Okay. Then after that, the next thing that they are telling us here is, they say that suppose if PRI is doing any ODI in a startup, means that in that foreign entity, which is the startup recognized as per the law of that particular country, then if an Indian entity is doing an investment, that investment should be done not out of public money, but out of internal accruals, means out of the profits that you have made. Means you cannot raise money by way of IPO here and put that money in the other country's startup. This is what they are trying to say, right? And similarly, if suppose a resident individual wants to do investment in startup of that foreign entity, it has to be done out of his own funds and not out of borrowed funds. Okay, this is one condition, because they are telling that here is if you're borrowing and doing, basically they are trying to restrict such type of activities. Acha, similarly, this is second point which is to be remembered in this entire answer. Next one, no person resident in India, means no PRI, shall make financial commitment in a foreign entity that has investment or which invests into India at any time, at the time of making such financial commitment or at any time thereafter, resulting in a structure with more than 2 layers of subsidiaries. Means if we are doing investment in a foreign entity, and that foreign entity has invested into India and it has more than 2 layers of subsidiary, then we cannot do financial commitment in such type of foreign entity which has more than 2 layers of subsidiary here in India. Not allowed. That is one point. Acha, but for that, this point that we cannot do investment, the PRI cannot do investment in such a foreign entity which has more than 2 layers of subsidiary here in India, this point is not applicable to some types of entities. See what are those, which is given on the next page here. A banking company, NBFC, insurance company, government company. To these four people, it is not applicable. So normally, apart from this four, if we want to do, if a foreign entity is having more than 2 layers of subsidiary here in India, then we cannot do investment in such type of, we cannot do financial commitment in such type of foreign entity. Yes. Okay. So 2 points, 2 specific points to be remembered here was, first of all, if we want to do ODI, we can do, but that foreign entity should not be engaged into 3 types of activities: real estate, gambling, and one more was if it is dealing with any financial products which is linked to Indian rupee without the approval of RBI. Okay, but in real estate, development of township, construction of residential or commercial premises, road, bridges, etc. is allowed. And next one, again, if we want to do the ODI in startup, then it should be out of our own sources. Fine. And then going on to the next point, that is requirements to be specified by the Reserve Bank. Other requirements, reporting requirements, realization requirement, in how much time the money should be realized into India, and any other requirements for doing any investment outside India will be specified by RBI from time to time. So basically, as I told you in the beginning itself, these rules and regulations are made by the central government, but these are administered, or we can say these are regulated by the RBI. So RBI will inform us from time to time what all are the terms and conditions for doing investments outside India. Yes. Okay. Then, now let's go to the last point, everyone here, last point. That is restriction on acquisition or transfer of immovable property outside India. Now, this is specifically talking about immovable property. Now, they say that no, this point we have already studied, no PRI shall acquire or transfer any immovable property situated outside India without general or special permission of the Reserve Bank. Means they say that if you want to deal in any immovable property outside India, we have to take the permissions of the Reserve Bank. Okay, but such permission is not required in 3 cases. Okay, such permission is not required in 3 cases. Suppose if I already have an immovable property, I am a PRI, but I am a foreign national. Then in that case, I need not take the permission of the RBI if I am a foreign national. Okay, or if I am a PRI, I already have an immovable property which was acquired by me before 8th July 1947, and I am holding that property with the permission of the RBI. Then now if I want to sell it, then I can sell it without the permission of the RBI as well. Right? Or if I have acquired that property on lease for a maximum period of 5 years. So leasing does not require any permission. So for these 3 cases, approvals is not required. Okay. Otherwise, if you want to buy immovable property or if you want to transfer immovable property, then the permission is required. Very, very clear with this. This is important. This entire, first of all, entire 21st point is important. So this is the first point that we studied. Next, they say that. Now, say for example, if I am a PRI, can I acquire an immovable property outside India by way of inheritance or gift? Can I acquire it? Answer is yes. Okay, a PRI may acquire immovable property outside India by way of inheritance or gift or purchase from a PRI who has acquired such property as per the rules and regulations. I am getting it from my father as a gift. I am a PRI, my father is a PRI, but the property is situated outside India. Can I take it as a gift from him? Yes. There is some Mr. X who is giving that property in inheritance to me. Both of us are PRI. Can I take it? Answer is yes. Okay, the property is situated outside India, but we can take it. Yes. Acha. Then next one. A PRI may acquire immovable property outside India from a PROI also. Here it was inheritance, gift or purchase from a PRI. PRI taking it from a PRI. Here PRI taking it from a PROI. By way of inheritance, by way of purchase from money out of RFC account, by way of purchase out of money provided under LRS or limit provided under LRS, or I can even take it jointly with a relative who is a PROI, or out of income or sale proceeds of the assets acquired overseas other than the ODI. So what are they trying to tell us here? What are they trying to tell us here? Here they say that notwithstanding anything contained in subrule 1, means in spite of anything contained in subrule 1, all these things are permitted. You can acquire. What was the first point? In the first point, they said that if any PRI wants to acquire, okay, if any PRI wants to acquire, he needs to take general or special permission of the RBI. But 3 cases permission is not required. If a PRI is, if that PRI is a foreign national, if that PRI had acquired it before 8 July 1947 and continue to hold it with the approval of RBI, and if it is acquired on lease. These 3 cases, no permission is required. Achha, apart from that, they say that if a PRI is acquiring from another PRI by way of gift, inheritance, purchase, chalega, allowed, no problem. If a PRI is acquiring from a PROI, chalega, if it is done by way of inheritance, if the payment has been done out of RFC account, if the payment has been done out of limit provided under LRS, or if we are purchasing jointly with a relative who is also a PROI, etc. This is allowed. This is the list of allowed things. Achha, similarly, say for example, there is an Indian entity and I am having a foreign office. Can I acquire an immovable commercial property outside India for business purpose? Yes, we can acquire. Can I acquire a residential property for my staff outside India? Yes, but that should be as per the directions issued by RBI from time to time. So here, this is for business purpose basically. Yes, and then a PRI who has acquired any immovable property outside India as per the FEMA provisions. As per the FEMA provisions, if that person has acquired, that person can even transfer this by way of a gift to a PRI who is eligible to acquire it. Now say for example, if I am a PRI and if I had already acquired that foreign property as per the rules, can I even gift it to a PRI? Answer is yes, we can gift it. Can I create a charge on such a property? Answer is yes, we can even create a charge on such a property. Are you clear with this? Yes. Achha, what if the original investment was not held legally? What if the original investment itself was not held legally? Then you cannot continue holding it. Right? You cannot continue holding it. Normal clause. Are you clear with this, everyone? Yes. Achha, now, one more thing which I would like to point out the difference here is, here also we had studied a gift point. And I'll highlight this one. Okay. And here also we are studying a gift point. What's the difference? In the above one, we are taking it by way of a gift. And here we are gifting it. We are transferring such property by way of a gift. So there's a difference. Huh? There we were taking as a gift from another PRI. And now we are giving it as a gift to a PR. Very, very clear with this? Yes. Okay. And this entire 21st point, please, 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 please mark it as important. And this is the normal point which we just discussed. If you had acquired the property legally, then you can continue to hold it legally. If you have acquired the property, if that procedure itself was illegal, then you cannot continue holding that particular property. Right? Please mark this 21st rule as very, very important. Earlier, we used to have a separate regulation for this immovable property. Now it has been included in this overseas investment itself. Chalo. So this marks the end of your second part. Remember, our first part was ending near the definitions, and this is your second part. And third part, the next part, will consist of all the schedules. Okay, third part will consist of all the schedules. Schedule 1 to schedule number 5. Okay, so now let's start with the last part of these rules, that is the 5 schedules that we have to overview here. You remember in rule number 11 to rule number 15, we had seen in the beginning 11, 12, 13, 14, 15. 5 rules were given and reference to 5 schedules were given. Schedule 1, Schedule 2, Schedule 3, Schedule 4, Schedule 5, which I had told you that we are going to see it at the end, right? So that is coming up here in the rules now. And once these are done, then we'll be just left with the regulations. Okay. So now let's start, everyone with me. Let's start with these schedules. So schedule 1, yes, see they are telling, see rule number 11. So this talks about ODI by Indian entity. Okay, ODI by Indian entity. Remember 4 people coming under Indian entity? First one was company, next one was body corporate, next one was partnership firm, and next one was LLP. These 4 people were coming under the term called as Indian entity. What if Indian entity wants to make ODI? What is the manner, etc.? Let's try to understand that. So first of all, they are telling that yes, the thing which we had done for the overseas investment also, that it should be done in such a foreign entity which is engaged into bona fide business activity. Okay, and subject to the limits and conditions provided in this schedule. So wherever you are doing the investment, that entity should be engaged into bona fide business activity. Terms and conditions of this schedule must be complied with. Okay, in what all forms can you do the ODI? In what all forms can an Indian entity do the ODI? It can be by purchase of equity capital, be it listed or unlisted, be it by way of right shares, be it by way of bonus shares, be it by way of swap of securities, derivative transaction, or capitalization of any amount which is due towards the Indian entity from the foreign entity. Example, if I am supposed to receive some amount from the foreign entity, and instead of giving me that amount, he has given me some stake in his company, then even that kind of an investment is allowed. So these are the ways in which ODI can be done by an Indian entity. Very clear with this? Yes. Acha. Now, so that was nothing but the manner of making the ODI. The thing that we understood from here was bona fide business activity subject to the terms and conditions and limits given in this particular schedule. Then after that, ODI in financial services activity. Okay. Now this is again falling under the same schedule, that is ODI done by the Indian entity. So they say that if there is any particular Indian entity, okay, here everyone. Suppose if there is any particular Indian entity which is engaged in financial services, say for example brokerage, etc., or banking, insurance, that kind of a thing. If there is an Indian entity which is engaged in financial service activity here in India, it can do ODI in a foreign entity which is directly or indirectly engaged into financial services. Means same activity, this kind of an investment is allowed, but subject to 3 conditions. Okay, subject to 3 conditions. This is allowed subject to 3 conditions. Indian entity should have posted profits for 3 years. For the last 3 years, profit should be there. For the last 3 years, it should have posted net profits. Okay, then we are registered. We are registered with our service provider. Example, if we are a broker, for example, then we are registered with SEBI. That way. Okay. And another thing is we have obtained, we means Indian entity. These 3 conditions are applicable to us because we are doing the investment. So we have obtained approval as required from both the authorities, Indian regulatory authority also as well as the host country's authority also. So if these 3 conditions are fulfilled, then an Indian entity can do ODI in a foreign entity where both of them are engaged into financial service activity. Very clear with this? Yes. Acha, ma'am, what about the other case? Ma'am, what if there is an Indian entity which is non-financial service entity? Non-financial service entity. Possible? Yes, possible. Can it do ODI in a foreign entity which is engaged into financial service entity? Yes, yes, it can do, provided this is except banking and insurance. Okay, provided this is except banking and insurance, but subject to 1 condition. Okay, only 1 condition, that our entity should have posted net profits during the last 3 financial years. So when can we do in banking and insurance? Only if we are engaged into financial service activity, then only we can do. Otherwise, you can do in other foreign entity which is engaged in financial service activity but not banking or insurance. Very clear with this? Acha, but 1 exception here. Say for example, I am such an Indian entity. Okay, I am such an Indian entity. I am not in insurance. Still I can do I can do ODI in a foreign entity which is engaged in general and health insurance. Which is engaged in general and health insurance, where such insurance business is supporting the core activity undertaken overseas by such an Indian entity. Okay, so see, this was falling under this point only, right? Non-financial means it is not into insurance, but still it can do in any foreign entity which is engaged into general and health insurance. Yes, so first of all, financial to financial is allowed. Non-financial to financial except banking and insurance is allowed, and non-insurance to insurance is allowed. We can remember it in this way. Yes. Okay. Acha. Can there be a possibility that when we check, see, there was a common condition that Indian entity should be posting net profits for the last 3 financial years, right? So now say for example, can there be a possibility that there was no profit posted for the year March 21 or March 22 because of COVID-19? Yes, exceptional circumstances can be there. Then it can so happen that the financial results for those period can be excluded for considering the profitability of the last 3 years. Means we can ignore those 2 years because of the special reason of COVID. Very clear with this? Acha, someone may say that it has also affected March 23, for example. Then you have to go and take the, you have to go and check the RBI circular, whether RBI is giving you that extension or not. But yes, for March 21 and March 22, they say that those years can be excluded while considering the last 3 years profitability. Very, very clear with this? Yes. Acha. Now, but just remember, whenever any investments, whenever these kind of investments are being done by banks and NBFCs, then they should comply to the terms and conditions laid down by the RBI. See, we are talking about financial services, right? So it can be a bank also. So whenever banks, NBFCs, etc. are doing such investments, then they have to make sure that they comply with the RBI regulations as well. Very, very clear with this? Yes. And now the most important thing, that is the limit for financial commitment. Okay, limit for financial commitment. How much can be done by an Indian entity? So they say that an Indian entity, whenever it is doing financial commitment, we have to see for all the foreign entities taken together. Means if I am an Indian entity, then in which all foreign entities I have done the financial commitment, that will be taken together. That should not exceed 400%, means 4 times. That should not exceed 400% of our net worth, that is Indian entities net worth, as on the date of the last audited balance sheet. This net worth will be taken as on the date of last audited balance sheet into 400%. This is my limit of financial commitment. Or whatever is directed by RBI or central government from time to time. As of now, this is the exact limit which has been prescribed by them. Very clear with this? Acha, in this limit, one thing will not be included, and that is capitalization of retained earnings. Capitalization of retained earnings. Suppose if some part of receivables are getting converted into equity. I was supposed to receive some amount from there, that amount is not received, but that is converted into equity. That will not be considered, that will not be calculated in this limit, means that can be over and above. Are you clear with this? Apart from that, everything else will be included. Okay, apart from that, everything else will be included. So this is very, very important. This was, see, I'll just revise it for you. This was financial services to financial services. This was non-financial services to financial services except banking and insurance. This was non-insurance to insurance. Okay. COVID, these 2 years can be excluded. That is the thing that we studied till now. Right. Then the next thing was limit for financial commitment. Okay. What is there in limit for financial commitment? 400% of the net worth as on the last audited balance sheet, or any amount prescribed by the central government or RBI from time to time. What will not be included in this limit is capitalization of retained earnings. That will not be considered. Rest everything. Suppose if we have done any financial commitment by issue of ADR, GDR, that will be considered. If we have done any financial commitment by stock swaps, even that will be considered. Suppose if we have done any financial commitment by utilizing the proceeds from external commercial borrowings. We have externally borrowed money, and from that if we have done ODI, even that will be considered in the limit. Are you clear with this? Only one thing will not be considered, that is capitalization of retained earnings. Are you clear with this? Yes? Okay. Now listen. This point, this proviso. Provided that financial commitment made by Maharatna or Navratna or Mini Ratna or subsidiaries of such public sector undertakings in foreign entities, financial commitment made in foreign entities outside India engaged in strategic sectors shall not be subject to the limits laid down under this paragraph. Means what are they trying to say? If subsidiaries of public sector undertakings, if they are doing financial commitment outside India in strategic sector, that is in natural gas, oil, etc., then that limit of 400% is not applicable to them. But only specific subsidiaries as told by the RBI. RBI has passed circulars and notifications for them. Okay. What do you mean by the term? Or when can we say that a foreign entity is engaged in financial service activity? When can we say that a foreign entity is engaged into financial service activity? Suppose if such an activity would have been done in India, then that would have required approval of the financial sector regulator. Such activity, treat as if such activity is carried on in India. Will you consider it as a financial service activity? If yes, then that will be considered as a financial service activity. Okay. Okay, fine, done. So this was all about your schedule 1. Schedule 1 was actually simple. Na? First 3 points, financial to financial, then non-financial to financial except banking insurance, then non-insurance to general and health insurance. Okay, then COVID 2 years will be excluded for that net profit for the last 3 years. And then we studied the limit, 400% of the net worth. This was mainly the thing that we studied in our schedule number 1. Then going ahead to schedule number 2. Everyone with me? Very simple, very small. It is, first one was ODI by the Indian entity. This one is OPI by Indian entity. Yes? Okay. So they say that limit. First of all, directly they have, do you recollect by chance? Do you recollect the meaning of the term OPI? Yes? OPI was any investment in foreign securities other than ODI and other than unlisted debt instruments. Remember? Okay. So now here everyone, OPI limit maximum 50% of the net worth. Ma'am, net worth as on which date? Last audited balance sheet. And as per the terms and conditions. ODI limit 400% of the net worth. OPI limit 50% of the net worth. Yes. Acha. A listed Indian company, not entity, a listed Indian company may make OPI including by way of reinvestment. What do you mean by the term reinvestment? Suppose if you have invested an amount and now there is a disinvestment, means the money is going to come to us because we are selling the investment. So instead of taking the money, we reinvest that money. So listed Indian company can do it even by way of reinvestment, and an unlisted Indian entity, rest everyone, can make OPI only under clauses 3, 4, 5 and 6 given under the last schedule. 3, 4, 5 and 6 was right issue was there, bonus instruments were there, capitalization of profits were there, swap of securities, etc. were there. So other entities apart from listed company can do OPI in specific manner only. Do you recollect we had studied? Now a doubt should come, ma'am, how come shares have come in OPI? You recollect we had done a point where the investment in Apple was 5% with no controlling interest, with no control. That was not coming in ODI, so that was coming in OPI. So on those shares there can be bonus rights, etc. Yes, fine. So this is nothing but your OPI by Indian entity. One important point to be remembered here is OPI by Indian entity is maximum 50% of the net worth as per the last audited balance sheet. Yes. Okay. Then going on to the next one, that is Schedule 3. Okay, that is Schedule 3. Schedule 3 is again overseas investment, everything taken together. Overseas investment by resident individual. When I talk about individual, individual stands for a natural person. Okay, individual stands for a natural person. PRI, who is an individual person, individual PRI, we can say. Right? Okay, chalo, now let's start. Now they say that, now in this they are going to talk about both. They are going to talk about ODI also, they are going to talk about OPI also. Now see what are they telling us here. Any resident individual may make ODI. Heading was overseas investment. Okay. Now here first they are talking about ODI by way of investment in equity shares or OPI in the manner provided in this schedule, and that will be covered under your overall limit of LRS, 2,50,000 USD per year. Remember? Yes. So because LRS was applicable to a resident individual, so if that person wants to do ODI, if that person wants to do OPI, for that also even that will be covered under the LRS itself. Okay, now going ahead. Now in case of overseas investment, first of all they say that if suppose a resident individual is doing ODI, direct investment, in a foreign entity which is not engaged in financial services, non-financial activity, and which does not have subsidiary or step down subsidiary where the resident individual has control in the foreign entity. Means where can the investment be made? Resident individual doing investment in ODI, doing ODI in a foreign entity, non-financial activity, plus such entity should not be having subsidiary and I should be having control in that foreign entity. Control means those 4 points. Remember? 3 points. Power to appoint directors, power to influence the control, the decision making and the policy decisions, etc. So this one is allowed. Okay, this one is allowed. Then I can do OPI including by way of reinvestment. Allowed. I can do any kind of investment by way of capitalization. Remember, I was supposed to receive some amount from the other country. Instead of receiving that amount, they have given me the stake. Or it can be by way of swap of securities, or it can be by way of inheritance, or it can be by way of ESOP, or it can be by way of gift, or it can be by way of rights, bonus, etc. These methods are also allowed. So let me sum up till here. Okay, let me sum up till here for you. This is your overseas investment by resident PR. Okay, overseas investment by resident PR. First of all, they say that limit will be, can I say LRS? For this, the limit will be LRS. Now, if I want to make ODI, then that has to be in non-financial activity plus no subsidiary plus I should be having control, right? Acha, if I want to make OPI, can I make? Yes, allow. Acha, if I want to make ODI or if I want to make OPI, can it be by way of capitalization? Yes. Can it be by way of rights, bonus, etc.? Yes. Can it be by way of ESOP? I'm getting ESOP in that particular entity? Yes. Can it be by way of any qualification shares? Yes. Can it be by way of inheritance, gift, etc.? Answer is yes. And different more methods. Are you clear with this? Yes. Achha, now see, two provisos coming up here, everyone. ODI in respect of clauses E, F, G and H, inheritance, sweat equity, ESOP, qualification shares, etc. may be made in a foreign entity whether or not it is engaged in financial service or has subsidiary, means irrespective of any condition. There is no such condition that it should be engaged, not engaged in financial activity, not having subsidiary. No. Means these are free fall. This is free fall. Okay. Then, provided further that acquisition of less than 10%, this we already know, acquisition of less than 10% without control will be treated as what? Will be treated as OPI. This we had seen while doing the definition itself. And last, this explanation we have already done. How to determine whether a foreign entity is engaged in financial service activity. Check whether that activity is called as financial service activity here in India. If yes, then yes. Okay. So this is basically the final conclusion. Okay. This is the final conclusion. That what are the pointers? What are the pointers if overseas investment is to be done by a resident PR? Are you clear with this? Yes. Chalo. Then going ahead in this same one, can you see this? Acquisition by way of gift or inheritance. Acquisition by way of gift or inheritance. Achha. Now, I am a resident individual. Can I acquire some foreign securities by way of inheritance from a PRI? Yes, I can acquire. Yes, without any limit. No LRS coming into picture. Without any limit, inheritance. Okay. Similarly, can I acquire foreign securities by way of gift from a PRI? Answer is yes. No limit, without any limit. Achha. Can I acquire foreign securities by way of gift from a PROI as per FCRA Act, FCRA Act? Answer is yes, no problem. So see the other 3 points here, everyone. All the 3 points are talking about foreign securities. Can I acquire it by way of gift? Yes, no limit. Can I acquire it by way of inheritance from a PRI? Yes, no limit. Can I acquire it in form of gift as per FCRA? Answer is yes, no problem. Are you clear with this? Yes, this is specifically for foreign securities by way of gift or inheritance. Yes. Then going on to the next third part, this is also very, very simple. Acquisition of shares or interest under ESOP, employee stock option plan, employee benefit scheme or sweat equity shares. Okay, now say for example, I am a resident individual here, Arpita is sitting here. She is an employee or director of a who is working in a branch of an overseas entity which is situated here in India, for example. Can I acquire shares or interest under the ESOP or sweat equity shares offered by that overseas entity? Possible? Yes. So see, a resident individual who is an employee or director of an office in India or branch of an overseas entity or subsidiary in India of an overseas entity. The parent company is outside India. Either its branch or its subsidiary situated in India. I am working there. I am getting some ESOP or sweat equity shares there. Can I get it? Can I get shares? Answer is yes, without any limit. No problem, without any limit. Are you clear with this? Yes, buzz. This much is to be remembered here. This much is to be remembered. And this was all about your schedule number 3. This was all about your schedule number 3. Are you clear, everyone, with me? Yes? So, we can say it this way. For resident PRI, these 3 points to be remembered. Then foreign securities, these 3 allowed. And then ESOP is allowed. ESOP allowed and no limit. We can simply conclude it in this way. Yes? Chalo. Then going on to the 4th schedule. Everyone. Let's go to the 4th schedule. Can we start? Yes. Acha, schedule number 4. See, schedule 1 was talking about ODI by Indian entity. Schedule 2 was talking about OPI by Indian entity. Schedule 3 was talking about overseas investment by resident individual. Right? Now, schedule 4. Simple. This is talking about other persons. Overseas investment by PRI other than Indian entity. Because Indian entity was already covered in schedule 1 and 2 and other than resident individual because this was already covered in schedule 3. Right? So schedule 4, everyone here with me. Chalo. Now what are they telling? First of all, investment done by a registered trust or society which is engaged in educational sector or hospitals, means which is setting up hospitals, etc. So that can do ODI in a foreign entity, no problem. But prior approval of RBI is required and a few more conditions are to be satisfied. Okay, ma'am, what all conditions are satisfied? First of all, the foreign entity should also be engaged in same sector. Hospital to hospital, education to education. It should be engaged into same sector. Okay, next one. We should have been into existence. We should have been into existence for at least 3 years before we do this investment. Okay, first stabilize yourself. First stabilize yourself. Okay, next one. The trust deed, which is generally formed in case of a trust, that should allow you to do ODI. Okay, then trustees' approval should have been obtained. Right, trustees' approval should have been obtained. Suppose if there is some special permission required from MHA or from central government, etc., then that should be taken. Then you can go and do investment. Then you can go and do investment in that particular foreign entity which is engaged into same activity. Are you clear with this, everyone? Acha, ma'am, what amount, how much amount of investment, etc., that will be specified by the RBI. Okay, that will be specified by the RBI. Clear with this? Yes? Okay. So five conditions. What are the 5 conditions? Foreign entity in which we are doing the investment should be engaged into same activity. Okay. Then we should have been into existence for a period of at least 3 financial years before preceding the year in which we are doing the investment. Trust deed should allow us to do the ODI. Okay. Trustee should give us the approval. And in case any special permission is required from MHA or central government, then that should have been obtained. Yes? Okay. Then, overseas investment by mutual funds or venture capital funds or AIFs. So again, these people can do it subject to terms and conditions as levied by RBI and SEBI. Above people as per terms and conditions of RBI. This is as per RBI and SEBI. Okay. Acha, limit will be decided by RBI plus central government. What amount of overseas investment can be done, and that can be individual limits can be decided by SEBI from time to time. SEBI can instruct regarding the same. This is what you have to remember. Okay, first point was for registered trust or society engaged in education or hospital. This one was for mutual funds, venture capital funds, alternative investment funds, etc. Then similarly, opening of demat accounts by clearing corporation of stock exchanges and clearing members. Now, say for example, if there are any foreign portfolio investors, okay, if there are any foreign portfolio investors who are offering their securities as collateral to us, then those are held by the clearing corporations. So we will have to hold those shares for some time. So for that purpose, can our SEBI approved members open demat account? Answer is yes. Okay, answer is yes. So it can open and maintain demat account with foreign depositories. Are you clear with this? Yes. If we can open demat account with Indian depository, for that we don't require any approval. But for opening demat account with foreign depositories, for that purpose approval will be required, but that is allowed. Okay. Our brokers or our clearing corporations can do that. Acha, similarly, acquisition and transfer of foreign securities by domestic depository. Acquisition and transfer of foreign securities by domestic depository. Now, say for example, there is an Indian depository which is holding, say for example, we have issued IDRs. Okay, you know the concept of IDR. Suppose if we have issued IDRs and we have foreign securities in return, can we hold it? Can a domestic depository hold it? Yes. Okay, can it transfer it also? Answer is yes. Okay, so they can deal. Means once you convert the depository receipts, means once the IDRs are converted, then the dealing in foreign securities is allowed. So that permission is available to the domestic depository as well. And then the last one here, that is acquisition and transfer of foreign securities by authorized dealer bank. Example, any money changer or such kind of authorized bank who comes under the purview of RBI. An AD bank, including its overseas branch, may acquire or transfer foreign securities as per the terms of the host country in normal course of its banking business. Just like these people can deal into Indian shares, similarly, they can even deal into foreign securities. So all the miscellaneous kind of a point, all miscellaneous kind of points are put under the Schedule 4 because it is talking about other persons, right? It is talking about other persons. And the last schedule coming up here is your schedule number 5. Schedule number 5 talks about overseas investment in IFSC by a PRI. Okay, till now we were talking about foreign entity. Now we are talking about IFSC. Now, can a PRI make investment in IFSC? Answer is yes, as per Schedule 5. Right, as per schedule number 5. Now they say that this PRI may make overseas investment in IFSC as per schedule 1, 2, 3, 4. Same, just like other people were making investment. Same way we can do it under IFSC. Just like we were doing it, do you recollect? In schedule 1, ODI in foreign entity. Schedule 2, OPI in foreign entity. Schedule 3, overseas investment by resident individual. So same way, any of those people, instead of doing it in foreign entity, they are doing in IFSC. So same schedules will be applicable with some exceptions. Okay. ODI which is being made in IFSC, the approval by the financial services regulator concerned, wherever applicable, shall be decided within 45 days from the date of application complete. Means if we want to make ODI in IFSC and in such a case, suppose if financial sector approval is required, then it should be decided within a time period of 45 days. Acha, if there is an Indian entity which is not engaged in financial service activity in India, but which is means non-financial making ODI in financial service except banking insurance, remember that point? For that net profit condition should have been met. Suppose if that is not met, then that Indian entity cannot do in the foreign entity, but it may make in the IFSC. See, I'll explain you here. Everyone, remember this point. Non-financial making investment in financial except banking insurance, one condition of net profit in last 3 years to be fulfilled. What if this condition is not fulfilled? Then instead of making in foreign entity, you can make in IFSC. That is allowed because for that net profit condition is not applicable. Okay. Then similarly, PRI may contribute to an investment fund or SPV set up in IFSC. We can do contribution in any investment fund. Acha, we can make ODI in a foreign entity including that is non-banking insurance if such entity does not have subsidiary or step down subsidiary and the resident individual has control in the foreign entity. We had done similar point earlier also. In case of a resident individual, we had done a point that if a resident individual is doing in a non-financial activity, that we had done it that way. So here it is doing, resident individual is doing in foreign entity which is engaged in financial services except banking and insurance. Then that resident individual can do in such a entity which is situated in IFSC, but it should not be having subsidiary, plus resident individual should be having control in it. Okay, I'll summarize this for you, don't worry. Everyone here. We are talking about IFSC, right? For the purpose of IFSC, they say that same provisions as given in Schedule 1, Schedule 2, Schedule 3, Schedule 4 is applicable. Right? Schedule 1, 2, 3, 4 is applicable. But with certain changes. Ma'am, what are those changes? First of all, whenever we are doing ODI, if any approvals are required, then that approval approval of financial service regulator. That approval should be obtained within a time period of 45 days. Okay, next one. Suppose if we are doing it non-financial thing, entity is doing in financial except banking and insurance. Except banking and insurance. And if net profit condition was not fulfilled, then if this is in IFSC, this entity is in IFSC, then chalega, no problem. This was not allowed for resident individual, right? But this was not allowed for Indian entity, but it is allowed for foreign entity situated in IFSC. Acha, next one. Suppose if any contribution has to be done to investment fund or to any special purpose vehicle, that is allowed. Okay. Or say for example, if a resident individual wants to do ODI in a foreign entity except banking and insurance in IFSC, it can do, but no subsidiary plus control. Means this foreign entity should not be having any step down subsidiary and we should be having control in that foreign entity. Now clear? Yes. This was all about the IFSC. Yes. Okay, so with this we are done with all the 5 schedules of your FEMA rules 2022. Yes. So this is the end of your third part. This is the third part of our amendment thing. Right? Now we should start with the regulations part. Okay, so then let's start with the last part, that is your foreign exchange management overseas investment regulations 2022. Before this, whatever we did was our rules part, right? So rules was mainly talking about the terms, condition, limits and all those things. And regulations is going to talk about the operational part of it, right? Reporting thing and all the procedures thing will come under these regulations 2022. Let's start with it, everyone here. Now, again, these were notified with effect from 22nd August 2022, right? Again, wherever in the entire regulations, wherever the word act will be used, they refer to the Foreign Exchange Management Act. Now, let's start with it. Let's start from here. Financial commitment by Indian entity by modes other than equity capital. Now, do you recollect the meaning of the term called as financial commitment? Financial commitment was ODI plus debt other than OPI plus non-fund based facilities, right? So, they are talking other than by equity capital. Example, debt, etc., non-fund based will be included here. So, they say that Indian entity may lend or invest in any debt instrument issued by a foreign entity. Same thing, debt or non-fund based. That is, they can do this, including they can do it to the foreign entity or to the subsidiary of such entity, overseas subsidiary of such Indian entity, subject to the following conditions within the financial commitment limit as prescribed in the rules. Now, financial commitment limit we have already done. That was 400%, if you remember, right, for ODI. So, if we are doing in other than by equity, even that financial commitment includes everything except OPI. So, the same limit that we have studied, that will be applicable. Okay. So, what is happening here? What are the conditions for doing this? Indian entity should be eligible to make ODI. It should be eligible to make ODI. It should not be disqualified, etc. Achha. Indian entity has made ODI in the foreign entity. It was eligible and it has done it. And it has acquired control in such foreign entity. Okay, it has acquired control in such foreign entity. And the financial commitments under regulation coming down, regulations 4, 5, 6, 7, which are going to come now, shall be reckoned towards the financial commitment limit. Means whatever are going to come here below financial commitment, as you can see here on the board, by way of debt, by way of guarantee, everything will be included in that limit. This is nothing new that we are studying. Okay, we have already studied about financial commitment, right? So now they are just giving us the bifurcation that what all things will be included in the financial commitment limit, right? Now listen. First of all, financial commitment by way of debt, even that is included in the term called as financial commitment. Can it do financial commitment by way of debt? Can it invest in any debt instruments, etc.? Yes. If we are investing in any debt instrument, can I say we will be receiving interest? Right? If we are receiving interest, then that interest shall be charged on arm's length basis. Remember, we had done a point that whenever any transaction, overseas investment transaction is done, the transaction should be valued on arm's length price. Same way, if any transaction in debt instrument is done, then the interest should be charged on arm's length basis. Right? This is one particular point. Right? Ma'am, what do you mean by arm's length? Means a transaction is conducted as if both the parties are unrelated. That was in case of debt. Now similarly, going for guarantee. Suppose if we are doing any financial commitment by way of guarantee, means we are giving guarantees either to the foreign entity or on behalf of the foreign entity or any of its subsidiary where we have acquired control. Different types of guarantees can be there. There can be a corporate guarantee, there can be a performance guarantee, there can be a personal guarantee, there can be a bank guarantee. These are the different types of guarantees which we can provide. Okay. Now the point here is, okay, now a few important points that we have to remember here is, okay, what is that? This point, fourth point is one such point that you have to remember, where a guarantee has been extended jointly and severally by two or more entities. Two or more entities have come together, they have given guarantee to a single foreign entity. 100% of the amount of such guarantee shall be reckoned towards individual limits of such Indian entities. Means suppose if A Limited and B Limited have given guarantee to a foreign company of, say, for example, 100 lakhs. For example, 100 lakhs. We have jointly given a guarantee of 100 lakhs. So in my financial commitment limit, 100 lakhs is exhausted, and even in B Limited's financial commitment limit, 100 lakhs is exhausted. Shall be calculated towards individual limits, means that will be considered in both of us limits, even if total is 100 lakhs. Okay, this is one point that you have to remember. And another one, in case of performance guarantee, 50% of the amount of guarantee shall be calculated towards the financial commitment limit. Means when you take it under the financial commitment limit, that is 400%, suppose if the guarantee given is 100 lakhs, then for the purpose of financial commitment limit, only 50 lakhs will be counted there. Okay, only 50 lakhs will be counted. Okay, so these are the two specific points. That you have to remember in case of guarantee. Yes, in case of debt, what was the point that we remembered? The rate of interest charge that we are going to receive should be on arm's length price. Right? Then going on to the next one, financial commitment by way of pledge or charge. Even this is included in that limit itself. Now, if suppose there is an Indian entity which has made ODI in a foreign entity by way of investment in equity capital. So, I can pledge the equity capital of that foreign entity in which we have done the ODI. I can pledge it. For what purpose will I pledge it? For availing fund-based or non-fund-based facilities. That can act as a security, right? That can act as a security. So I can pledge the equity capital of that foreign entity. Along with that, I can even create charge by way of mortgage, pledge, etc. on its assets in India or the assets outside India of the foreign entity. Since I am holding investment in equity capital of that foreign entity, I can pledge the equity capital of foreign entity in which ODI has been done. I can do that. Plus, I can create a mortgage on its Indian assets as well as its assets outside India. For what purpose am I doing though? Because I should be getting some benefit for availing. See here it's written. For availing fund-based or non-fund-based facility. Here also. For availing of fund-based or non-fund-based facility for myself or for the foreign entity. It can be for any of them. But I can pledge or I can even create mortgage, charge, etc. Are you clear with this? Yes. Okay. And whatever is the amount of pledge or the amount of facility, whatever. The amount of pledge means what I have kept with the AD, what I have kept with the bank, or the amount of facility that I have got, whichever is less, that will be considered in my financial commitment limit. Okay, that will be considered in my financial commitment limit. Are you clear with this, everyone? Yes or no? Yes. So fourth point was talking about debt. Fifth point was talking about guarantee. In guarantee, just remember that performance guarantee only 50% will be considered in the limit. And in case of pledge, etc., the amount of securities or the amount of capital that I have pledged or the facility that I have got, whichever is less, that will be considered in my financial commitment. Right? Then the next one, acquisition or transfer by way of deferred payment. Deferred payment means payment in installments. Okay. Now, say for example, whenever a PRI acquires equity capital or I subscribe to the shares of a company from outside India, that is from a PROI, or whenever we sell it, and whenever this transaction is considered as a ODI, then in that case, the payment, there will be consideration involved. The payment can be deferred. The payment can be deferred for such definite period from the date of agreement as provided in such agreement. See here, see the wordings. Everyone with me. Where a PRI acquires equity capital by way of subscription to an issue or by way of purchase from a PROI. PRI purchasing equity capital from a PROI, or where a PROI acquires equity capital from a PRI. And when it is considered as ODI, then the consideration, the amount that is involved, the payment can be deferred as per the terms of the agreement. Now, what are those? The foreign securities equivalent to the amount of total consideration shall be transferred or issued as the case may be upfront by the seller to the buyer. What do you mean by this? And another thing is the full consideration finally paid shall be compliant with the applicable pricing guidelines. So see the words, now everyone with me. The payment of amount of consideration. Example, a PRI is acquiring from a PROI. Means I have to pay. Okay. In other case, I will have to receive it. So the payment of amount of consideration for the equity capital acquired may be deferred for such definite period from the date of agreement as provided in such agreement, subject to following terms and conditions, that is, the foreign securities equivalent to the amount of consideration shall be transferred or issued as the case may be upfront by seller to the buyer. Means what? Say for example, if a PRI is selling, I'll write it there, one second. If a PRI is seller, okay, PROI is the buyer, then can I say securities will go from PRI to PROI and PROI is supposed to pay the consideration to the PRI? Can it be deferred? Yes, but for a definite period only. Okay. Now listen. Whatever consideration PROI is paying, example, PROI is paying 1 lakh USD then PRI will give securities equivalent to 1 lakh USD. Did you get this? If I am selling the securities to the PROI, can I say I am supposed to receive the consideration from the PROI? PROI paid me 1 lakh USD, for example. How much value of security should I give to PROI? The security is equivalent to 1 lakh USD. Means whatever amount we are receiving, give that much amount of securities. Hisab barabar. Right? And suppose in next installment, they give me 50,000 USD. You give securities equivalent to 50,000 USD. Are you clear with this? Yes. Means whatever is the balance amount can be deferred, but only up to a definite period. Yes. And that will be, this balance amount will be considered as non-fund based commitment, a promise to pay in the near future. Very, very clear with this? Acha, can we charge interest also if they are giving us late payment? Yes. Buyer can be, or seller can be, alternate. Whoever is doing the default, that person can be indemnified by the seller. Right? Okay. Then going on to the next one, that is mode of payment. Everyone with me? Yes, mode of payment. Now, PROI who is doing the overseas investment, if he wants to do investment, he will have to transfer the money. Money can be transferred through banking channels. It can be done from funds held in specific account. It can be done by way of swap of securities or by using the proceeds of ECB or ADR, GDR, etc. Legal method only. Right? Very simple, very clear. Okay. Then going ahead. Obligations of PRI. Obligations of PRI. Now what are they telling? Say for example, if we are acquiring equity, if we are doing investment in equity capital in any foreign entity, which is considered as ODI, means I will be getting share certificate from the other country. We will have to submit that share certificate to our authorized dealer bank, the bank through whom all these transactions are happening, the intermediary. Whatever are the applicable documents, example share certificate, that has to be submitted to the authorized dealer bank within 6 months from the date of effective remittance, from the day when we do the payment, or the day on which the dues are capitalized, or the date on which the amount due was allowed to be capitalized, as the case may be. We can assume it basically whenever the transaction was done from that day, within a time period of 6 months, we have to submit it to the authorized dealer. Okay. And whoever is doing this transaction, say for example, Arpita is doing this transaction with that foreign entity through the authorized dealer bank, I will have to obtain UIN number from the Reserve Bank. That is basically such a number through which all the transactions will be routed. Okay, through which all the transactions will be routed. So, shall obtain a UIN from Reserve Bank for the foreign entity in which ODI is intended to be made before sending the money to them. Before sending the money or before acquiring the capital, whichever is earlier. Means basically before you enter into the transaction, before that first obtain UIN. This is just a reference number which will be used every time whenever you do a transaction. Okay, and all transactions, all such ODI transactions will be routed through the same UIN. Clear with this, everyone? Then the next point, a PRI having ODI in foreign entity shall realize and repatriate to India. Realize and repatriate means realize the money from them, and repatriate means bring back the money to India. All dues receivable from the other country, the amount of consideration received on account of transfer, etc. See, this will happen only when we are selling, only in case of disinvestment. Bring everything back to India within 90 days. Within 90 days from the date when such receivables fall due or the date of transfer or disinvestment. See, above 60 days, above 6 months was for what purpose? That was for submitting the share certificate to the AD. This 90 days is bring back the money to India. Right? Sometimes it happens that if we want to participate in any bidding process, etc., we have to make remittance towards earnest money. A deposit is paid. So that is allowed. They simply say that, okay, that is allowed, no problem. Okay, so what was the conclusion? What was the conclusion of this particular point here was? Only 2 points to be remembered. Whenever we are acquiring shares, you must have got share certificate. Please submit it to the AD bank within 6 months. Whenever there is a case of disinvestment, whatever money is receivable from there, please repatriate to India within a time period. Please repatriate to India within a time period of 90 days. Clear? Yes. Acha. Next point. Next point is reporting requirement for overseas investment. This is important. This is important. Reporting requirement for overseas investment. Now, what are they telling here? They are telling that whenever a PRI is supposed to do a reporting, that has to be done through designated AD bank and in the format provided by RBI. Obviously, so that it becomes centralized. Right? What all things that person has to report? Okay, what all things? Financial commitment, disinvestment. Financial commitment, when is that supposed to be reported? At the time of sending money. At the time of sending the money. Disinvestment, within 30 days of receipt of money. And restructuring, remember restructuring of balance sheet? Yes, restructuring within 30 days from the date of such restructuring. Please inform it. Please inform it. Yes. Okay. Now see what are they telling us here. A person, PRI, other than a resident individual may make OPI, making any OPI or transferring such OPI by way of sale shall report such investment or transfer of investment within 60 days. Within 60 days from end of the half year in which investment or transfer is made as of September or March end. Means April to September will be considered as first half year. From that, within 60 days, October to March will be considered as second half year. So from March, within 60 days, please communicate about any OPI done. Previous point that we studied, that was for the ODI. The above point that we studied, this was for ODI. This one is for OPI. Yes? Acha. Then, suppose if we have got ESOP, then reporting has to be done by Indian office or branch of overseas entity. Means the one who has given me that ESOP, that person has to go and do the reporting. In other cases, we have to do the reporting. In case of ESOP, they will do the reporting. Yes? Then, going to the next one. Everyone with me. Yeah, I will summarize this for you before we go ahead. Everyone here. In case of reporting in case of ODI, reporting in case of OPI. Okay. In case of ODI, financial commitment, reporting should be done at the time of sending money. If you are doing financial commitment, so we'll send money at the time of sending the remittance. Please do the reporting. Okay. Then, in case of disinvestment, you will receive money. Then, within 30 days of receipt of the money. Okay. At the time of restructuring, remember we were allowing the other countries, foreign entity to restructure its balance sheet. So, within 30 days of the date of restructuring, this reporting has to be done. Yes? Acha. Now listen. In case of OPI, okay, in case of OPI, this is for other than resident individual. They have to do reporting within 60 days they have to do the reporting within 60 days. Of what? 60 days of half year end. Simple, everyone. Fine. Okay. Then, let's go ahead. Achha, in case of ESOP, who will do the reporting? The office who has issued me the ESOP. Then going ahead. Now, a PRI acquiring equity capital in foreign entity as ODI shall submit annual performance report in respect of each entity wherever the investment is done every year by 31st December, and where the accounting year of such foreign entity ends on 31st December, then APR shall be submitted by 31st December of the next year. So basically, if I have done ODI, if say for example I have stake in Apple, for example 20%, means there is an ODI, 20% stake, more than or equal to 10%. I have 20% stake, I have to file APR every year by 31st of December. If Apple's accounting year ends on 31st December, then by next 31st December I have to submit it. Ma'am, I have some stake in Apple by chance. I'm having say for example 0.00001% stake in Apple. Am I also supposed to submit? No. Reporting is not required where PRI is holding less than 10% plus no control. Small person, so no reporting. And if a foreign entity is under liquidation, then also I'm not supposed to submit it. Clear with this, everyone? Yes. Okay, so yes, so in these explanations, nothing is to be remembered specifically. You can just read it once, but nothing is to be remembered. So what all things did we study here in case of reporting requirements was, this reporting has to be done by the PROI, right? This has to be done by the PRI. Reporting should be done through the, basically we have to do the reporting to the authorities, RBI, central government. This has to be done through the designated authorized dealer bank, right? And the format will be provided by the RBI. In that particular format, you have to do it. For ODI, in these three cases, in these specific time, you have to do the reporting. For OPI, within this much time, you have to do the reporting, right? APR reporting has to be done when equity investment is done in a foreign entity where holding was more than or equal to, it has to be done in all the cases except in 2 cases. If it is in liquidation, there is no need. And if the holding is less than 10% plus no control, then no need. Rest in all cases of ODI, we have to file the APR. APR, right? Annual Performance Report in respect of each such financial foreign entity. Then going ahead to the next point, that is delay in reporting. What are they talking here? Suppose if we did not submit the evidence of investment within the time specified, you remember we had studied one point in regulation number 9, first sub-regulation, that share certificate etc. had to be submitted within 6 months of doing the remittance etc. Suppose if that is not done, or we did not file the report in as per regulation number 10, then we can do it along with a late submission fee. Here it is, along with the late submission fee at such rate, manner, time prescribed by the RBI. Means, ma'am, how much will be the late submission fee? That will be told by the RBI from time to time, right? Provided that such facility can be availed within a maximum period of 3 years from the due date. Means, late means how much late? Maximum late or maximum delayed by a period of 3 years from the date of due date, right? That is one thing. Now, another thing is, now say for example, the first point that we studied, that was as per the new regulations. Okay. Now say for example, if someone was supposed to submit the report before 22nd August 2022 and if that person has not done it, then in such case also that person can do the submission along with the late submission fee as prescribed by the RBI from 9. Means the law remains the same. If you were required to file it earlier or if you are required to file it now, and delay is allowed up to how many years? 3 years from the date of, for this point, it is 3 years from the date of publication of these regulations. Means 3 years from 22nd August 2022. And for the first point, it was 3 years from the date of due date. So basically, if you have done any delay in submitting, you can still do it with late submission fee. And last, restriction on further financial commitment. Achha, till the time you have not regularized the filing of that report, means till the time you have not complied with all the provisions, you cannot do any further commitment. Okay, you cannot do any further financial commitment, you cannot transfer anything further. No, not allowed. First, rectify your mistake. That is, first file that report or submit whatever documents you are required to do. First do that, then only you will be allowed to do any further financial commitment or transfers. Clear with this? Yes. So with this we are done. With this we are done with your regulations. So regulations was quite simpler and shorter as compared to your rules. Yes, whatever we have done, just do that much, and once full read of everything. Okay, once full read of everything, just do that much. Okay. Okay, so we have to cover a small amendment of FCRA chapter which pertains to section number 32, talking about revision of orders. So we had a very small section given in FCRA, section number 32, which is talking about revision of orders, that central government has the powers to do revision of orders, which has been already passed under FCRA. So small clarification has been issued here. This was inserted with effect from, as you can see here, everyone. Yes, this was inserted with effect from 1st September 2022. Okay, that it was inserted on 12th of August, that with effect from 1st September 2022, if we want to do any application for revision of an order which has to be passed by the competent authority, then that can be done only online and through this particular website. Means application for revision of order can be done only online, only in electronic mode, right? And for that they have issued a few FAQs. Obviously that is not important, but yes, you can read it once so that entire revision of the entire section can be done, right? So first thing that they are asking is, who is eligible to submit the revision application? So any person who is aggrieved of an order of central government and who wants to go for revision, that person can submit that revision application online, right? Next one they are asking is, how can an association file an application for revision under FCRA? So that should be that will be addressed to the secretary of MHA in electronic form only. It will be addressed to that particular person. Can we send application through physical mode? Answer is no. That is not acceptable. That is not allowed. They have stopped it. Then what is the procedure for filing that online application? So they say that go to this FCRA website. After going to the FCRA website, go to the heading services under FCRA. There is a subheading called as revision application, again section 32. There you have to go and submit it. Then are you required to send physical copy? They say no, there is no need to send the physical copy. Is there any format for submitting the online application? They say no. Just write an application on the plain paper, sign it, scan it and upload it on their website. That is the way they are accepting the revision application. And is applicant required to submit justification that why is he going for revision? Answer is yes, justification is mandatory, otherwise your application can even get rejected. Then what is the fee for making an application? Fee is 3,000 rupees, which has to be paid online through the payment gateway. And what is the time limit? This is nothing new. Time limit is 1 year. When the order was communicated to us or when we came to know about it, whichever is earlier. From that day, within a time period of 1 year, we can go and file the application. Okay, so the small amendment was any application for revision of order has to be done online, electronically only on the FCRA website. This is what the amendment was all about, right? Okay, so FCRA amendment was this much only. Rest amendments already covered in your book. Okay, so let's start with the IBC amendments. The first amendment which is there, this is already covered in our book. This one. Going to the next one. Yes, let's start from here. Now, this amendment pertains to section number 59, which talks about the voluntary liquidation in case of IBC. Section number 59, remember that? Yes. So, now, in case of voluntary liquidation, that liquidator was appointed and all those things was happening. Rest everything remaining the same. Okay, rest everything remaining the same. Suppose if corporate debtor wants to replace the liquidator, then he can do so. He can replace the liquidator by passing a special resolution. Okay, you can appoint a new insolvency professional as a liquidator. Just pass the special resolution for that. And once the new person comes into picture, once the new insolvency professional comes into picture, he shall within, see here everyone, he shall within 7 days of his appointment as liquidator intimate the board. Board means IBBI about such appointment. So, in voluntary liquidation also there was a liquidator. The liquidator can be changed by the corporate person. Corporate person can simply pass the SR, appoint the new liquidator. New liquidator will come into picture within 7 days of his appointment. Earlier this was 3 days. Now it is 7 days. Within 7 days of his appointment, he will intimate the board about his appointment. Yes, this is one. Please insert this particular point in section number 59, everyone. Yes. Acha. Second, next one. Next amendment that we have to do here. Now this pertains to section number 7. Section number 7 of IBC. Do you recollect this? Section number 7 of IBC, where we were making application, where application was done by whom? Initiation of CIRP was done by the financial creditor, right? Where the application was done to the adjudicating authority. So there a point is there that once you go and file that application, remember we go and file that application with the adjudicating authority. So there is an amendment in the law that the applicant, the financial creditor, shall serve a copy of application even to the registered office of the corporate debtor against whom the CIRP is going to be filed, and to the IBBI, means along with adjudicating authority, we also have to go and submit a copy of it to the IBBI and to the corporate debtor by registered post or speed post, or by hand or by electronic means. By hand means physical delivery, or by electronic means, before filing with the AA. Means before you go to the adjudicating authority, submit a copy of the same to the corporate debtors office also and to the IBBI also. And that can be done by registered post, speed post, hand or electronic means. Simple amendment. Yes. Okay. Then the next one. Next one is in regulation number 30. Okay, regulation number 30. You remember we had done a point in, I think it was somewhere near the liquidation part. Consolidation of claims, verification of claims, etc. Liquidator is also supposed to do that. So now what is the new proviso that they have added in the regulation is, liquidator shall also verify the claims collated during the CIRP. Means first CIRP was happening. Okay, then the plan got rejected. So now this has led to liquidation. liquidator or the insolvency professional would have already collected the claims or collated the claims during CIRP. So liquidator will verify those claims also again at the time of liquidation. Okay, the claims which were collated during CIRP but not submitted during liquidation process. There were some creditors who had submitted the claims during CIRP but did not submit during liquidation process. Those claims also will be verified by the liquidator within 30 days from the last date for receipt of claims during liquidation process and can either accept or reject it. So liquidator will collate the old claims which were submitted during the CIRP process plus the new claims which it received during the liquidation process. Okay. Then. Achha, this is not page number 6.71 of module. This is page number 6.68 of the module which is available on the website of ICI as of today. Okay. Then. Going to the next one. Going to the last one. Everyone here. This was regarding meetings of the COC, meetings of the Committee of Creditors. So for that purpose, we had studied that. For that, in meetings of COC, we had studied that meeting can be convened by the COC. Quorum was required. Remember, 33% quorum was required, etc. We had studied that much. So now, generally, they conduct the meeting for the plan, for the resolution plan, right? Can they conduct meeting for other purpose also? About working of the corporate debtor after the plan is approved and all those things? Yes. So, till what time they can convene the meeting? So, meetings may be convened under the sub-regulation till plan is approved. See, there were two possibilities, na? Either the plan is approved or the liquidation order is passed, right? Till the liquidation order is passed. This is going to be the end of CIRP. So, meetings can be convened till this date also, till the plan is approved or till the liquidation order is passed, and decide on the matters which do not affect the plan submitted before the A. Imagine if they have submitted, okay, if they have already submitted the plan before adjudicating authority and we are still awaiting whether the plan will be approved or the liquidation order will be passed, what will happen? Still we can convene the meeting for discussing on other matters. This is the additional point which has been inserted here in meetings of the committee. Clear with this? Yes. So these were the small amendments which you have to do in additional. Yes. Okay. Okay, so this was all about your amendments. FEMA, biggest thing. Okay, IBC small 3 to 4 points, FCRA only 1 point. You are now fully prepared for your May 23 examinations. As again, I'll tell you, 10th edition book plus this amendment video is sufficient for your May 23 examinations. Yes, the notes are available on our website in the free resources, free notes section. You can go there, you can download the notes from there. Yes, I wish you all the best for your examination.